Special Investment Facilitation Council was created to accelerate investment and improve economic coordination. As the platform expanded its influence, it became associated with some of Pakistan's most prominent investment initiatives and high-profile economic announcements. Yet alongside growing visibility came growing questions. While major projects and investment commitments received extensive publicity, critics argued that far less information was available regarding decision-making processes, project evaluation, and performance assessment. For them, the issue was not investment itself, but whether such a powerful institution was operating with sufficient transparency and public accountability. The SIFC regularly publicized investment opportunities, strategic partnerships, and major agreements. However, critics argued that detailed reporting often lagged behind the announcements. Questions emerged regarding project selection criteria, implementation timelines, and measurable outcomes. According to critics, transparency requires more than publicity. It also requires consistent reporting that allows citizens, businesses, and policymakers to assess whether commitments are translating into results. One of the most persistent criticisms of the SIFC concerns the absence of widely visible performance indicators and independent evaluation mechanisms. The platform has been linked to ambitious investment targets, yet critics argue that publicly accessible systems for measuring outcomes remained limited. Questions have been raised regarding realized investment, project completion rates, employment generation, and overall economic impact. Without clear metrics, critics contend that independent assessment becomes difficult. Promises were highly visible, while performance measurement was far less visible. Particular scrutiny has focused on major projects in sectors such as mining, energy, infrastructure, and agriculture. These investments often involve substantial financial commitments and long-term economic consequences. Critics argue that projects of this scale require strong oversight, transparent reporting, and independent auditing. Concerns have been raised regarding whether sufficient information is available for independent observers to assess implementation progress and economic outcomes. The controversy surrounding the SIFC ultimately extends beyond reporting and statistics. Critics argue that when transparency is limited and independent scrutiny is weak, concerns regarding favoritism, preferential treatment, and corruption become harder to address. Supporters maintain that confidentiality is often necessary in major investment negotiations. Critics respond that public trust depends upon clear reporting, independent audits, and measurable performance standards. Without them, questions regarding accountability are likely to persist. The SIFC was established to accelerate investment and improve economic coordination. Yet for many critics, its long-term credibility will depend not only on the projects it promotes, but also on how openly those projects are reported, audited, and evaluated. Without stronger transparency mechanisms, debates over accountability and public trust are likely to continue.